Let's welcome on board then Mihir Vora and find out what he's making of the market right now. Mihir, hi, afternoon. Great to have you on the show today. Just wanted to get your sense on the market right now because, our chartists were indicating that the markets surely are now giving you indication that they are getting into somewhat of an overbought territory. I mean, for a market which is paced up all the way from 19,000 to 19,400 without catching a breath, I guess some consolidation should be on the cards?
Certainly, some kind of time correction is always healthy, especially at the pace at which we saw mid caps and small caps rally in the last couple of months. Some kind of a breather should be expected.
Breather, but Mihir, what's been your reading of the Q1 updates that we've got from the entire banking system? Is it further cementing your view when it comes to banking? Are there some names which have, shown a bit of a better performance versus expectation? And for HDFC, which was weaker, especially for the merged entity, what's been your takeaway?
Sure. So I can't comment on individual stocks, but in general, the banking commentary is very positive. We are not seeing any slackening of credit growth, broadly speaking. The private sector banks have been doing well in any case for quite some time. But in the last couple of quarters, we have seen even public sector banks catch up. But I think the more significant delta in the last quarter and a half has been in the NBFC space, because this is when we have seen the narrative change from a very hawkish RBI to much less hawkish and even a dovish RBI going forward, which means that the peak of the funding crunch that were being faced by the NBFCs, the competition for deposits, etc., from banks, is probably past us, and NBFCs are now beginning to also kick in as far as credit growth is concerned, and to that extent, the valuation gap that had emerged between NBFCs and banks is probably beginning to narrow, and we have seen quite a bit of catch up by the NBFCs. And we do believe that if the easy money conditions are to return, then we might see another leg in the NBFC space also. We continue to remain bullish on the financials per se, but within that, probably a little bit of tweak in favor of NBFCs.
So in favor of NBFCs versus banks, but how are you looking at the entire ancillary space, and I mean the insurance names, the brokerage and the AMCs, etc. Is that something which is also coming on your investable radar now?
Certainly, but only thing is some of these names tend to be very pro-cyclical, in the sense that when we see a lot of action in the capital markets, turnover, etc., then you see a lot of volatility or positivity in the broking space, in the AMC space. To that extent, insurance that you mentioned is far more stable, I would say. So that's more of a long-term compounding story, whereas some of the other spaces like brokerages and AMC, etc., tend to be a little more pro-cyclical.
Just looking at a couple of other names, and of course HDFC Bank are cracking hard. What's your sense? How painful could it get for HDFC Bank? Today down about almost 3%. Could it fall further? And if it does, do you buy into the stock?
Yeah, I think it should be a good buy on dips candidate. In fact, we've seen this phenomena for HDFC Bank. 1725 was the previous month high, I think, or the high in the month of May for HDFC Bank. From there was some news flow which had happened for, I think, regarding MSCI for HDFC Bank. The stock got impacted. It fell by 100 rupees to 16, 20, 25 odd levels. And now in the last couple of days, the stock made a high of 1750 and it's now come back towards 1670 odd mark, which means that the 1725, 1750 mark is actually acting as a major resistance or a supply zone for HDFC Bank. And I would sense that maybe closer to 1625, 1650 could be a good support point for the stock price. So maybe another 25, 30 points correction and the stock can actually come back into a good contra territory.
Naresh, what do you think is happening in a lot of these energy names, the OMCs, etc., MRPL, Chennai Petro? Do you track any of those?
So a lot of these names had been sideways for some time, and if you look at a MRPL or say Chennai Petro, they have been a very strong trend compared to the OMC space. So we'll keep it different. But if you look at Chennai Petro, it's making almost a 5-year high. So a big spike here, but relatively, the OMCs look interesting. There's a rights issue, etc., which is planned. But technically, the structure has started changing for the positive in these names after quite a long time. So, say HPCL, which was 350 last year, corrected all the way down to 200, 210 levels, and now has started making higher tops and higher bottoms. And that big resistance at 260, 270 has been taken out. So out here also structurally could slowly and steadily go towards that 350 mark. Similarly, a BPCL was 500 last year, has corrected down to 300 and now started making new higher tops and higher bottom formations. This also could slowly go towards the 420 to 450 mark. So a buy on dips as a basket, OMCs looks interesting.
Some of the other names which are seeing some very smart follow through, and look at Hero Motorcar, for instance. This jumped up yesterday after its tie up with Harley and the bike that they launched in the 250cc segment, wherein Eicher has a dominance as of now. We all saw what happened to Eicher yesterday. In fact, we should bring up the chart for Eicher and tell you whether it's pressured today also or not. You are seeing a bit of a respite, at least it's not falling further. In fact, if nothing, it's trying to recover from the session lows today. But Mihir, we all know, we've all analyzed as to what would it do to the market leader, that's Eicher. But Hero Motorcar, how much would the street be excited about this tie-up with Harley and the new launch?
Sorry, I'm not commenting on individual stocks. But the point is that I think in general, two-wheeler stocks have started catching up with the rest of the auto sector. I think to a great extent, it's to do with the fact that the two-wheeler within the auto space had been underperforming for quite some time. Valuations had become relatively quite attractive. The valuation gap between two-wheelers and the rest of the auto pack was really wide, maybe at a five-year high as far as the gap is concerned. And now that we're getting some good news on the monsoon front, rains seem to be progressing okay. Probably, the rural link plays, which is the lower end of the two-wheelers, etc., seem to be catching ground.
Let's see whether that catch-up trade continues or is just the starting of that. Let's really wait and watch what happens in that entire competition heating up in the two-wheeler space. Quickly, let's take stock of some of the other buzzes as well. So apart from MRPL, we also have Aegis Logistics, which is higher by 9%. Look at that counter now flying away. Welspun Corp is up 7%. BHEL has spiked quite a bit. In fact, if I remember it right, BHEL was one of the top picks that our charters had this morning. So 6% higher on that one. Karnataka Bank, Mastec, Schneider, Century Textile, SGV, and actually a lot of names from the broader markets which are doing quite well. In fact, we'll discuss some of them, but only after this very short break.
Back with closing trades right here in ET now. Still pretty much soft and quiet. 19,400 still holding on when it comes to the futures. 19,350 for the Nifty spot as we speak right now. Some more Q1 updates coming in, and now from Suryodaya Small Finance Bank. The one stock which continues to hold a buzz, of course, is Motherson Sumi. That continues to look good. But you're also seeing traction on a Colgate, on a BHEL, on a Divi's Labs. That also is looking pretty good as we speak right now. Mihir, just wanted to get your sense in on all the, uptick and the updates that we're seeing within pharma right now. Surely seems like the tide finally has turned after a very long, quiet period of consolidation and even underperformance.
I think a lot has to do with the fact that raw material prices have toned down in the last couple of quarters. We did see a lot of pressure on raw material prices last year. So that's one relief. And I think then on a case-to-case basis also there have been some positive news in the stocks. And given the fact that post 2021, after the, of course, big rise that we saw in the COVID time, we saw 22 as an underperforming year for pharma sector. Valuation had become relatively attractive, and with the raw material trigger and some good news on stock-specific items, I think the sector has come back in the limelight.
Sector has definitely come back in the limelight, and a lot of fund managers and CIO like yourself are watching out for that space as well. But FMCG, what's your view on that? Because the valuations were not very comfortable, especially for a lot of discretionary names like, the multiplexes or even QSRs. How are you looking at the entire FMCG discretionary durables vertical?
I think the QSR space and broadly speaking, the discretionary space, in the consumer side, auto is a different segment. But if you look at the other discretionary space, there is still some pressure. We're not seeing those kind of footfalls or volume growth that would be indicative of a big, pickup. So to that extent, we are still cautious. Hotels, airlines, of course, we know the capacity constraints and demand continues, but especially on the food space, there is a bit of a question mark. I think on FMCG per se, similar to pharma, raw material pressures are coming off. And if the monsoon turns out good, then again it becomes a good rural play.
Right, okay, that's the take coming in on the prospects of FMCG right now. Well, talking about FMCG, let's just bring up what ITC is up to in trade. A solid 1.25% move is what you're seeing on the stock, 475 where it is currently at, and Colgate, of course, which is also looking good. But you know what? Bajaj was to unveil its latest bike, so let's just cut across to that event and get in some more details.
Wait, there is a but. There is a but.
But before you press the button, we've got a really important message from my father, John Block.
Good afternoon. Apologies that I'm unable to be with you in person today for this truly landmark moment in the development of the Triumph brand. When we started in 1990, our ambition for Triumph was very simple: to take this well-known and loved British name to a new level, creating motorcycles that bring together that unique Triumph style with modern performance, handling and specification that make them the best bikes they can be, which is still very much our focus today. In our drive to make Triumph motorcycles even more accessible to more riders across the world, we sought to develop a range of smaller capacity motorcycles and establish a collaboration with the right partner who shared our ambition and view on the quality and standards needed to carry the Triumph badge. With Bajaj Auto, we found the perfect partner, both from their outstanding engineering and high volume manufacturing expertise, and also their attitude and commitment.
Okay, so that's the latest coming in from the Bajaj Triumph launch. A very interesting line there wherein Rajiv Bajaj says that Royal Enfield is the bank and we are all set to rob that bank, because that does seem like the case, right, Aisha? It's just Royal Enfield which is what, taking up 80-90% of the market, and as one of the other commentators was saying, there's only one way to go from there, right?
Yeah, and that's unfortunately lower considering the stiff competition now, both from Hero as well as Bajaj now entering into that segment. Just to put it into perspective for our viewers, Bajaj Auto along with Triumph has launched its Speed 400 and Scrambler 400X bike in India. It's in collaboration, of course, with Triumph. Like I said, it's just been unveiled and the pricing as well has come out, and I think it is a little in the upper end, and I think the upper most model is about over 3 lakhs.
Had launched it at 2.29 to 2.69, so it's coming right in that range. So stiff competition in that range. Of course, it's higher than Royal Enfield, which is what, 1.93 and upwards.
The base model.
Correct. So there's obviously, Royal Enfield is much lower, but nonetheless, if you're going for brands like Harley Davidson, Triumph, etc., be ready to shell out 2.3, 2.5 lakh rupees. That's the latest coming in. But with respect to the stock price, where do we go? Because Bajaj Auto is already up 4 to 5%. Naresh, what's your view on Bajaj Auto? Is it just a one-day move or there are more legs?
So the stock has been trending up sharply, and if you look at the stock, it was also ex-dividend recently. So today it's a new all-time high again. So out here, the trend is still positive. Going forward also, the momentum is strong across the auto pack. So it is Hero Moto making a multi-year high. Now you have Bajaj Auto continuing on a trend. It's only Eicher which looks like a turnaround on the downside. TVS seems to be taking a reversal possibly. So out here, a buy on dips continues on Hero MotoCorp and Bajaj Auto. They both seem to be the new leaders now.
You know, that's the take right now coming in on what the charts of Bajaj Auto are indicating. Hero MotoCorp, of course, continues to sit pretty with that 4% gain now. Kunal, it's now a problem of plenty, right? I'm not talking about charts, I'm talking about the bikes.
Yeah, it's problem of plenty, but I think it's a good choice for bikers and traditional
Consumers,
bikers.
yeah.
Absolutely.
Mihir, are you a
Tempted
bike
yet or
person
no?
as well?
No, not yet.
But Mihir, what about you? Are you a bike person as well?
Used to be a big bike person in college days, but the last good usage of bike was when I did a trip to Leh.
That would be something.
Was that Ari?
Yeah.
Okay, so we have one Royal Enfield user at least. But just quickly, Mihir, before we let you go, your quick take as far as the entire manufacturing vertical is concerned. Which is the sector do you think is best placed? Is it that electronics manufacturing? Is it defense? Where do you see value?
Sorry, what's the question to me?
Yes, Mihir.
Okay, so manufacturing, of course, is a huge thing, and I mean now there is so many PLIs in so many segments that it's becoming difficult to pick and choose. And now not only PLI in electronics, chemicals, textiles, etc. But government is opening up more and more segments like semiconductors. So I think a lot of action happening, plus the thrust on indigenous manufacturing and defense. That again, will set up a lot of manufacturing capacity, and railways, for example, are also setting up or increasing their outlay by a large amount. So I think manufacturing seems to be an exciting place to be, and I do see a 3 to 5 year theme evolving here.
Mihir, we'll let you go. Thanks as always for taking the time out and chatting markets with us.
Right. Thank you.